Welcome to the Planning to Win podcast. My name is Tom Lakatos. I'm a senior vice president at Lincoln Investment. The likelihood of your success financially increases when you are able to articulate your goals, when you share them with other people, and you write them down. In our experience as advisors, we can help you with some of the basic building blocks around financial planning and tackle some of the more common questions to help jumpstart your planning. And we're looking forward to bringing that to you in this series. And it's not a question of if you're going to face adversity. It's a question of how prepared are you when it happens. Can you imagine someone you love deeply passes away, like a spouse, and you get your 5 days off for bereavement? And then you immediately got to go back to work because you got to pay the bills.
There could be people that rely on you financially, and maybe only you. If anything were to happen to you, they'd be kind of left in the dark.
1 in 10 families in the United States has people with special needs in their family. One of the mistakes people make, we see sometimes, is people leave assets to people with special needs and end up disqualifying them from Social Security disability. Hi, folks. Welcome to the Planning to Win podcast. My name is Tom Lakatos, Senior Vice President at Lincoln Investment, and I'm really excited to have this opportunity to talk today with Michael Kurek. Michael's an advisor on our team, the Employee Advisor Group at Lincoln. We work with a lot of clients, and in light of it being Financial Planning Month, Michael, I thought it'd be a good idea to get together with you. You know, last month was National Life Insurance Month, and as you know, we think a lot about this kind of stuff, right? What we know is a lot of clients, we know clients are going to face adversity, right? We often talk about it, and it's not a question of if you're going to face adversity. It's a question of how prepared are you when it happens. And if you think philosophically about the way that we approach financial planning, the role that insurance plays in a financial plan is really important. Specifically, if you think about the concept of goal achievement and wealth accumulation, right, it's a pretty simple formula. Get invested is part of the equation. Stay invested is the other part of the equation. We know that the time value of money is really the engine behind people achieving their financial goals, and that money that you invest for your retirement is good, allowing multiple time periods to double using the rule of 72. The challenge is sometimes adversity will cause us to prematurely distribute. Michael, you deal with a lot of clients. I'm excited to have this conversation with you today. Can you just tell us a little bit about your background before we dive in?
Yeah, absolutely. Thanks for having me. I've been an advisor for a little over 3 years. I work with about 300 clients. We focus on financial planning, so we focus on all aspects of your financial life, and that includes insurances like we're talking about today. And like you said, staying invested. Awesome.
Well, and I appreciate that. I'm excited to talk to you a little bit about, let's start with, the big question, right? We often get, the cool thing about insurance is it's very rarely do we get the left field question that we've never heard before. Most people ask the same kind of questions. So what I really want to focus on is let's address the big questions for people. There's always personal nuances. Let's start with the most common one, which is, why do I need life insurance, right? I think there's this image of the stodgy guy in the tweed jacket going door to door pulling policies out of a briefcase from 1934, right? Truth is, it's not really that business anymore. Mike, when you think about why clients should have life insurance, what are some of the things that come to mind?
Well, I think one of the most important things is protecting your family and your loved ones. Depending on what your priorities are or what your life's like, that can change from person to person. But I think whenever we lose somebody, that is a hard thing to deal with emotionally. And one of the things we stress on is trying not to make financial decisions when you're going through an emotional time. So one of the big things we focus on is, hey, if something like that were to happen, is there a way that we can, at least for a period of time, protect what's most important and focus on your family and not have to deal with any kind of major financial decisions.
Yeah, that's a really important point. I think that what we know, unfortunately, is that people make bad decisions, right? When you throw emotion on top of that, it usually is not the best framework for making your best decisions. And, what I want people to really think about, and we've had to deal with this, right? Can you imagine someone you love deeply passes away, like a spouse, and you get your 5 days off for bereavement, and then you immediately got to go back to work because you got to pay the bills, right? There are ways around that. I'll give you an example, Michael. I remember when I had my practice, I had a client that simply his wife just couldn't make the amount of money he made. He was a sole breadwinner. He was an executive at Bell South. He made roughly $800,000 a year, right? And he had a lot of money invested with me. And when I ran his financial plan, it said that he needed an additional $10 million so that if something happened to him, his wife would be able to sustain their lifestyle that they'd gotten accustomed to. And the reality is she didn't have the ability to go and make $800,000 herself. And he really didn't want to buy the insurance. And I sort of put our relationship on the line and said, if you don't do this, I don't think I can be your advisor, right? If something happens to you, she's going to have to get a job, and it certainly isn't going to pay $800,000 a year. So I think just to keep me quiet, he bought $10 million of life insurance coverage. And then darn if he didn't have a heart attack at 53 years old and drop dead in his sleep, right? And I remember the power of having the conviction that I had. Michael, talk a little bit. What are some other reasons, right, that people might buy insurance? There are lots of reasons for it.
Yeah, there's lots of reasons. And like you said, income protection in that case is definitely a big one. But also to protecting the assets or the lifestyle that you want, whether that's buying insurance, to cover your mortgage. That way that's maybe a big financial burden taken off, a spouse's life. There's other reasons such as creating multi-generational wealth. A way to pass along assets tax-free to your kids. There could be, people that rely on you financially and maybe only you, that if anything were to happen to you, they'd be kind of left in the dark. So it's, there's lots of reasons, as well as also investments. It's also a way to create, a tax-free pool of investments for you as well.
Yeah, those are interesting. I think about as you're talking, I'm trying to think about how they apply. Like, for example, the idea of, 1 in 10 families in the United States has people with special needs in their family, right? So, the idea of using life insurance so that, like, for example, we have a friend of the family who's got an adult, 2 daughters, one with special needs that's like 45, one without special needs that's like 48. And functional, the person with special needs is very functional. They have a job, etc. You wouldn't really know that they had special needs until you talk to them, and then it would become apparent. But as an example, one of the mistakes people make, we see sometimes, is people leave assets to people with special needs and end up disqualifying them from Social Security disability, right? And then they got to use the inheritance to pay for quality of life. And one of the things we've talked about as a team is, we call it holding the bag, as an example, right, Mike? If you are holding the bag for somebody else financially, meaning if the parents in this case pass away, that special needs adult at 45 is going to need help from somebody, and it's going to end up being the daughter at 48. So the example is they've used life insurance, in this case specifically a second to die life insurance policy that pays on the death of the second parent to fund a special needs trust that'll provide income and quality of life support to the adult with special needs. So the 48-year-old older sister is going to be able to care for that adult, but she won't have to come out of pocket to do it. The parents had the foresight to think ahead about it. Talk a little bit about this one, Mike, because you mentioned like a mortgage, right? I think about things like mortgages or maybe kids' educations. Talk just a little bit more about that. I know that's a little more common in people's lives. They have houses, they have mortgages, they've got kids going to college. These are risks that have a start date and an end date. How do you think about covering those, and what role can life insurance play in those situations?
Yeah, so, first of all, there's, 2 major kinds of life insurance, term and permanent. Things like your mortgage or your kid's education, like you said, have a start and an end date. Those are things I would consider using term insurance for. What that means is, basically your insurance, you pay on a premium for a specific period of time to cover maybe that particular goal. And those are some things I would use to solve and protect, what you're looking for there.
Yeah, which is really important, right? The idea that, again, our role as financial advisors is really about, we can't stop the bad thing from happening, but you sometimes can stop the dominoes from falling, in essence, that can cause people real hardship. Like, how would your life change if your spouse didn't come home and it changed your kid's college goal? That's avoidable, right? Or it put you in a position where you couldn't pay your mortgage potentially because you relied on that spouse's income. These are the kinds of things that it's a finite time frame, right? Like mortgages have, 20, 30 years, right? 15-year fixed, 20-year fixed, 30-year now, adjustables fixed. The reality is life insurance can provide some funding. So in the meantime, if something were to happen, you'd be able to pay the house off. Mike, this is really good. Are there any other things that come to mind? Like, for example, I'm wondering your thoughts. I'm sure you get this. I know you deal a lot with small business owners. Does life insurance have a role with small business owners from your perspective?
Absolutely. So, what happens to that business that it is now worth something, or maybe not now, but will be in the future. But what happens if anything happened to that owner? What happens to their employees? What does that look like? And life insurance can solve for some of those, what ifs. If anything were to happen to that owner, can those employees keep their jobs? Can the companies or services that they're providing continue to go on to their clients? There's absolutely an aspect there.
Yeah, I think about that. Like, for example, like if I owned a small business, and I think we've seen this before where people don't really realize it. But like if I owned a small business and let's say you and I were partners as an example, right? Just to make this concrete for our audience. And I drop dead, right? You're now, whether you realize it or not, your partner is now my wife, who may or may not have the ability to be involved in that business. She may or may not have the acumen, certainly, right? And so a strategy might be that we agree ahead of time on a buy-sell agreement where in the event that something happens to me, you'd receive a death benefit, right, in the form of a life insurance policy, and then contractually be obligated to pay my wife off when she's out, and now it's your business. That's a pretty basic example of how life insurance can be used to fund a buy-sell agreement in advance with business partners that ensures that the people that are capable of running the business are running the business. To your point, there's a lot of moving parts. When you talk about employees, you talk about clients, you talk about contracts, and some businesses really deserve the forethought in solving for some of these contingencies before it happens. Wouldn't you agree?
Absolutely.
Yeah. Awesome. Well, listen, Michael, we could go on for hours. I think we're off to a really great start. I appreciate you coming on the podcast today. I'll look forward to having you again really soon.
Yeah, thanks, Tom. Appreciate it.